But first, all's quiet on the Western Front as stocks hit record highs yet again. But it's a different story over in China, where doubts are growing that a trade deal will get done anytime soon. CNBC's Eunice Yoon first broke this story, joins us live from Beijing with the very latest. Hi, Eunice.
Hi, Melissa. Well, it does appear as though there's growing pessimism within the government here that a deal can be reached at least by this year. A government source familiar with the trade talks told me that people here were troubled when President Trump about a week ago had suggested that there was no agreement on phasing out tariffs. That's a very important point to Beijing. He said that the Chinese side felt they had an agreement in principle. Now, there continues to be disagreement over some of the basic points in the deal. For example, the U.S. has been pushing the Chinese to have specific targets for agricultural purchases. He said that the Chinese have been resisting, at least in part, because they're getting pushback from other trading partners and they don't want to be seen as alienating them. He said that there's been more of a debate now as to the political situation in the U.S. and President Trump's political standing. Currently, it's unclear because of his possible impeachment as well as an election just a year away. So he said that now the strategy is that the Chinese want to continue to negotiate. They're watching and waiting to see what happens. But a lot of the focus now is on supporting and prioritizing the domestic economy. And in fact, today we had some movement on that with the central bank. The central bank had surprised the market by cutting its short-term funding rate for the first time in 4 years. And analysts expect that it's going to continue to cut and likely cut its new benchmark rate on Wednesday. This is the LPR. Separate to that, the U.S. Announced that it's going to renew its licenses for companies doing business with Huawei, the embattled Chinese tech giant. Those 90-day licenses are going to be granted. And this is only days before the Federal Communications Commission is expected to designate on Friday whether or not it's going to call Huawei and ZTE national security risks. Melissa?
You know, Eunice, it's funny because prior to your reporting early this morning on the PBOC move, cutting the reverse repo rate was seen as China's willingness to do a deal because they had to do something about their economy, and now it's being seen as the reverse. It sounds as if the Chinese believe they have the upper hand at this point with what's going on politically in the United States.
Yeah, I think that as more time passes, there is a feeling that time is on China's side, that from a political standpoint, President Trump is in a more precarious situation than President Xi Jinping, even though you could argue that President Xi Jinping does have a lot of pressure himself, domestically as well as from Hong Kong. It doesn't look as though there are enough factions who have any power to really unseat President Xi in any way. President Trump, though, in a much different political situation, and that's actually a really important part of the calculation, that even though China does see that its economy is slowing down, even though the manufacturing sector is suffering, it's still, as we've seen now for over a year, willing to take on that type of pressure for the manufacturing sector if it feels that some of the longer-term issues, such as attempting to change its economy, are going to be threatened.
All right, Eunice, thank you. Eunice Yoon for us live in Beijing. So the question here is, if Beijing is so pessimistic about getting a deal done, why is Wall Street still sitting at all-time highs? Guy?
I think the simple answer, I think a lot of the guys on the desk would agree, is because they believe, either correctly or incorrectly, that somehow our Federal Reserve and central banks around the world have our back. I think the answer is that simplistic. By the way, I don't believe that. I think that's what's going on. Now, if you told me last night these headlines would come out and you said, where's the S&P going to close today? I would have been down at least 30 handles, if not more than that. And here we are, the S&P's unchanged. It's remarkable to me, the resiliency of this market. I've said it for a long time, correctly, that I don't think there is a U.S.-China deal. What I've gotten incorrect is the fact that the market doesn't seem to care. I thought for sure at a certain point the market would be negative on the back of this.
Market doesn't seem to care, to Guy's point, but it's about positioning. So people have to get long going into year end. They've avoided the market. That hasn't been the trade. Now, right now, what could stop it? The market. It's not trade. It's the Fed telling you they're soft, they're easy, and they're not raising. They don't have to cut. They just don't have to raise.
Well, I do think that you're right. I mean, I think the Fed is still the largest player in the markets right now. But I think what the markets have done in the last 3 weeks to month, for whatever reasons, maybe it's a slow stabilization or recovery in global PMIs. Maybe this is a labor market that gave you a great payroll number just when people were questioning. But if you listen to Goldman this morning out there basically saying the economy is going to be better than people thought, JP Morgan, Marco Kolanovich comes on the show and talks to us about how they actually see 3Q as an EPS trough and that you're starting to see real acceleration. So that delta of growth, even if it's off of a nothing base, is enough for a market with Steve's under, people under positioned, with a Fed that says we're not, we may not be cutting rates anytime soon, but we're certainly not going to hike. That's a great recipe. And by the way, market's gone up about as steep as it has during any period in the Trump presidency as supposed or whatever's happening in Washington is happening. The market doesn't care about that right now.
Tim, I think to that point, this move towards global cyclicality began in August when the trade stuff was at its worst, right? When it looked like there would be no deal. So I'm not convinced a bad headline overnight does a lot to derail the stocks that are most impacted by this. Look at how the China-sensitive stocks acted today. AMAT, Apple, Deere, Macau Gaming, they were leadership stocks today. So the market was clearly focused on something else, whether it's Fed odds of a hike next year, those have actually gone up, whether it's PBOC, whether it's China PMI starting to bottom here. We've seen it in Hong Kong. We've seen it with German DAX as well. Very export-driven market. PMI is probably putting in a trough there. So I think this is about not whether things are good or bad, but are they getting better or are they getting worse? And I think the action of the stock says global growth might be getting better here.
But when we talk about global PMIs starting to show signs of an inflection point, right? And so people are getting more positive about stocks around the world. Isn't that also predicated on this notion that the trade war tensions are easing or getting better? I mean, because if they don't, then we have to ratchet down our expectations for growth around the world, not just here in the United States.
I think that's right. So I think trade is certainly very important. If I read Goldman's note correctly today, there basically was on the assumption that there's no incremental tariffs higher from here. Mm-hmm. So they're saying we can even go sideways in where the status quo is, and they think, okay, there is some presumption out there that there won't be a rollback, but if we hold ground here and don't get worse, we're going to be okay.
And Tim, I might add to that, when you look around the world, the areas that are most China sensitive are already down 40% from where they were in late 17, right? So you've priced in a lot of bad news, particularly in Germany, particularly in Hong Kong, particularly with Macau. So again, it's a question of whether things are getting better or worse, and status quo is not worse.
Yeah, I think that there's also a giant poker game going on here. I think the Chinese, by lowering rates, I think they're gearing up for we're not going to make a deal. That's the way I interpret it. And then they're saying to themselves, is President Trump really going to pull the trigger on tariffs on 2 weeks before Christmas, right? Will he make that bet and potentially derail?
What do you think?
I think he would pull the trigger. I absolutely think he would pull the trigger because there's enough time until the November election. So in his mind, he will take the month of pain to make a point and draw the line in the sand. So I happen to think he would. And he
likes to play with the S&P points. He feels like he's got a bunch of them. But I don't buy into that the Chinese are waiting for another Democrat to take the Oval Office. They're worse than Trump.
They're playing the game that President Trump is going to start getting a little bit desperate before the election.
Exactly.
That he's going to want to secure a win by securing a deal.
As long as the market, I hear that.
It's not
I hear that part.
that
They're not betting on another
exactly.
person. I hear that, but the market keeps going up. To all of our point, I think that it's about the Fed and it's about trade. And right now, it's about easy money, and both countries are printing.